Welcome to the daily update for Friday, February 4th, where we'll look at the action in the market today and then see how things look for Monday, February 7th. And we had a bit of an up day, wasn't really strong. It was more of a sideways day. We're still seeing kind of a positive backdrops as we go through this. There's that real tug of war going on between growth and value. And it seems like it changes from one day to the next. On Thursday, we had the real negative news about Facebook, and that took everything lower, and everybody's freaking out about that. Well, then on Friday, Amazon came out, and it was seen as really positive. Also, some weakness that we've been seeing in the economy, well, that was really settled, at least on Friday, for right now, when the jobs report came out, and it was much stronger than expected. So we're seeing this continual back and forth, and that probably will continue with each day passing, with earnings reports coming out, with these economic reports that we get, with the different geopolitical events. We have the current situation still in Russia and Ukraine, which is at least not hitting headlines, top of the headline news right now. But we have the Olympics starting in China, and that's a very politicized event. So there's a lot of different things really at play right now. And so there's this little tug of war, and every day can be a little bit different than the next day. So let's recap what happened on Friday. We did have a positive open. The futures had been up a lot stronger during the night. They fell back a little bit, so we really didn't have a big gap open from Thursday's close to Friday's open. Prices did drift lower, and we're still seeing that. But the first hour, I kind of discount the whole anywhere from 60 to 90 minutes. That's the overnight orders getting executed. It's the people that are not necessarily professionals getting involved in the market, and things can gyrate all over the place. I look for things to settle later on as the session goes. There's that old adage that says the amateurs open the market and professionals close the market. So that's why I focus more on as the day goes on, and then really hone in on specifically the last hour that the market is open. So we did drift lower. We went down to S1, which was at about 44.51. We found support off of that, and then we bounced for pretty much the rest of the session until we went into the close. There was some give back, maybe shoring up some things before the weekend, which is quite common. And we ended up being up 0.52% on Friday. We were above average with our volume. Volume's been pretty good lately. I use a 50-period exponential moving average to study the average volume. And anytime we're above that, that's usually a good sign as far as who's participating in the market. Whether it's going up or lower or up or down, we use other tools to measure that. There was the big jobs report on Friday that I mentioned. We are seeing some improving technicals. We're also seeing some technicals either going sideways to slightly more negative. But overall, the picture that I'm seeing in the background is still positive. Now, that could always change. We only analyze this for the next trading day. We still are in the middle of earnings. Inflation is still a concern, and interest rates. Interest rates really went up on Friday. And then, of course, the different geopolitical concerns, which I put the Russia-Ukraine situation and the Olympics into that, because it's something political could happen. It's happened before. Just think of 1972. So what are some comments that we can make? There was selling at the open and at the close, but most of the mid-session, we saw a lot of buying going on. So it was a positive day, and the technicals overall are kind of mixed to more of a positive nature. That's what I'm taking from this. But on a negative side, we're still seeing small and mid caps lag. We want to see them come up out of that base that they've been in for quite a while now. The earnings and jobs reports did show a lot of strength. The market continues to be overvalued, and that won't change for a long time. And our trend condition, it's a bit mixed right now. The bias is also mixed, and the momentum is mixed. So we're getting a real mixed picture, But personally, I'm putting more of a positive flair behind it. We'll have to see how things work out. So let's look at what happened as far as sentiment. And I have some new sentiment charts to show you today. On Thursday, there's some sentiment reports that are released. And sometimes I'll make those for Friday's video. Other times I'll wait a day and then put those in the video for Monday that I prepare over the weekend. But we're on this fear and greed index, we're not showing an extreme reading, and we continue to be in the middle. That's where we've been for quite a while now. As far as the VIX, it did decline a little bit on Friday, and we closed just at about the midpoint. So nothing was really gleaned from studying the VIX, at least on a daily chart. Then the VIX of the VIX, it also declined a little bit on Friday and went a little bit sideways on a closing basis. Then this is one of the new ones. If you've ever heard of AAII, which I've been a member, and unfortunately this is us, and you'll see why I say unfortunately here in just a second. This is the American Association of Individual Investors, and they have some good resources. And they have some webinars and seminars and things that you can attend, and some literature that's interesting. Well, what they do is they take a survey of all of the people and they say, okay, who is bullish? Who thinks the market's going to go up? And then they say, okay, who thinks the market is going to go down? And unfortunately, we are seen as the dumb money. That includes you, it includes me. We're not the big institutions. We're not the big conglomerates or even some hedge funds that really can push the market one way or the other. They see us as the dumb crowd. And so this crowd as a whole tends to react rather than proact. And what I've done in the program that I teach is my mission is to teach the people involved how to proact. See things before they happen. So instead of going, oh my gosh, what's happening, and then react to that, we can see things unfold so that we're not caught off guard. We're not surprised. That's one of the biggest drawbacks that I've seen. And one of the biggest skills that I've had to learn is not getting caught off guard, not being surprised. So just planning for every contingency at the same time, looking at the evidence and then saying, okay, we're going off in this way, so this is what I will do. We're going off in a different way, so this is what I'll do. Well, looking way over on the right-hand side, we can see, and you're going to have to know your market history a little bit here. I don't have an S&P chart on here, but we are pretty extreme negative right now. And other times when we've been extreme negative, that usually signals some kind of a bottom. Other times that are really extreme are 2008 into 2009. That was the financial meltdown. We didn't really see this all that much in 2000 until we started to hit bottom in 2002 and 2003. And then we ended up coming out of that. So that could be positive. This is a contrary indicator. When a whole lot of people who are not necessarily professionals and don't have a lot of experience are going one way, we might go that way for a little bit, but then we eventually want to switch and go in a different way because they tend to be wrong at significant times. So, and the reason why you see two numbers here, one is just the daily value. And then the other one is I have since this is a weekly chart, I have a 4-period simple moving average on this as well. And the moving average is actually a little bit lower than the darker -17. So that could be something positive. Another chart also historically, and this doesn't look like it's all that much, but this is the RIDEX ratio. And I've used RIDEX mutual funds for a long time. They have enhanced mutual funds. They have inverse mutual funds. Well, then they got bought out a few years ago. Got bought out a few years ago. And I don't use them as much because I've switched over personally more to ETF type strategies. But we have been, for the last couple of years, really going lower, lower, lower. What this is measuring is the bear to bull ratio. Bear down, bull up. And as long as this is declining, that means that the people that are in the RIDEX funds, they're bullish. They think the market's going to go up. Well, this past week, we saw a real spike in bear activity. People are freaking out. These are people that tend to react instead of proact. And so it's not surprising to see this. Now, is this a big deal compared to what we've gone over the last couple of years? Yeah, it is. But looking back historically, way back into the 90s, this thing can go a lot higher. So we want to look at it in a bigger context, but also look at it in the smaller context of where we've been, especially since the COVID plunge. The last time we really got a spike was when everything crashed in early 2020. We haven't been back to that level since then. So this could be potentially positive. As far as our sectors, kind of across the board, a mix. The discretionary, which had been getting hammered pretty heavily, it was up the strongest on Friday with the financials, energy. Those are more the value plays. And then tech, that's of course the growth side of things. It was up slightly, but then we also saw a number of sectors that were down on Friday. So this is telling me that there's no real conviction one way or the other. They're not really taking things much higher and they're not taking things much lower. We're kind of in between. There was a bit of a different scenario from Thursday to Friday. People were looking at, oh my gosh, if Facebook is falling apart, the world's falling apart. And so they go more into the growth type of, they go more into the value type of stocks. And then on Friday with Amazon's report, it's like, wait a minute, maybe the world's not ending after all for tech and we can get back in. And then overall, when everything was said and done, we were kind of about even with that fight. And then energy is still performing the best since we had the high in early January. Discretionary, even though it did well on Friday, it's still down since the high. As far as inflation, the BDI ticked up a little bit on Friday. Our technical alerts, we didn't see many. There were some that were positive and some that were negative. And I'm going to really start reading this from the bottom up, where the NASDAQ went above 13.9. Energy set a 4-year high, which that goes with our sector chart that we just looked at. The NASDAQ then went over 14,000. The Dow fell below 35,000. And then the staples, the things that people have to have, that crossed below 70, which would be an official overbought signal. And then the S&P actually went above, and we closed just at about 4,500. And then the NASDAQ went above 14.1 and then 14.2. So overall, for tech and for the more speculative stocks, it was a more positive day. For the more defensive stocks or value stocks, it was a little more negative. So let's look at the chart. No real gap from Thursday to Friday. We went all the way up to the pivot and then dropped down to S1 for the day. We actually went negative for a little while, but then this is where the real strength of the day came in. We found some support, came all the way up and tried to go above R1, went a little bit sideways, and then we saw some selling into the close and closed right at about the daily pivot. And that's pretty much indicative of nobody wins, nobody loses. It was kind of like a tie, even though we were up overall. As far as what scenario do you see played out, it really hasn't been decided yet. Then looking at our daily chart of where we're at, we're still holding above intermediate term support, and we closed just a little bit under the pivot for February, but we had an up day from Thursday to Friday. We're down 6.17% since the all-time high. And again, this is based on closing prices, not intraday prices. Growth saw a little bit of an increase. Value saw a bit of a decrease on Friday, which was just the opposite of Thursday. And then the NASDAQ 100, it bounced and actually outperformed the S&P in comparison. As far as our trend, we're kind of getting a mixed picture. The ADX is starting to go sideways, although it's still above 20 and it's still a trend with the red line higher. So we would still default back over to a negative trend based on this chart. So we saw a little bit of a decrease in selling and decrease in buying power on Friday as well, according to the ADX. If this really starts to roll over and go down, then you might be looking at more sideways strategies. As far as our breadth, we actually were a bit negative. We saw, based on price and volume, an increase in the selling pressure, which caused these lines to turn down ever so slightly. Then the ratio, though, continues to be positive. The blue line is declining, but it hasn't crossed back above the red line yet. New highs and new lows. We did see some new highs and more new highs than new lows on Friday. So that keeps this line going up. And our 10-day moving average is also turning up. So that's more of a positive backdrop. Our accumulation, we're above the 200 period moving average. So that means that it's starting to turn up. So that is a bit more positive. As far as our short-term indicators, we're kind of dancing around a little bit to below the 20 period moving average, moving averages. Our 20 period moving averages are declining, 50 and 200 are declining. So we're not seeing a lot of continued follow through strength right now, but we're not seeing a lot of real overwhelming weakness either. Then with our moving averages, we're looking at overhead resistance. We still have both of the 200 period moving averages below us. So we're kind of in no man's land right now. There is a 100 period moving average that I use sometimes. I break that out when we're in a sideways strategy. But when we're in a heavily trending environment, which we have been for the last couple of years, I leave that off of this chart because I go from the 50 to the 200, and then for shorter term, I use the 20. The MACD is still looking positive. The Swinland short-term oscillator, it turned down a bit on Friday based on price and volume. The McClellan oscillator switched over to below zero on Friday, so that's more negative. The stochastic RSI is coming off of an overbought reading. Our intermediate term indicators were below the 50, and this could form some kind of overhead resistance. It already has, that we saw on Wednesday. We came right up to the 50 and then bounced down below that. So to get things even more positive, we want to come back to this 50 and then break above it, and then also be able to break above the simple moving average too. PMO study, it's showing some improvement, but it pretty much went sideways on Friday. And then based on price and volume, continues to show some improvement. The other PMO study, we're seeing a decline in the those PMOs that are rising, and the buy signals continue to advance, and those that are above zero fell a little bit on Friday. The BPI, it actually declined and went a little bit sideways. So we didn't see a lot of changes there. And you won't notice any changes on our point and figure chart when I get to that. Our moving average rainbow, the blue line is starting to cross below the red, but we're still kind of in the middle trying to figure out what's going to happen next. So we're not seeing that really sharp decline like we saw during the COVID plunge. And we're not seeing things roll over, at least yet, like we saw back in 2018. So things tend to be holding up fairly well right now. Doesn't mean they won't turn more negative, but looking at what we have in front of us, things are still holding up. Stochastics continue to improve short, intermediate, and long term. The summation index turned down slightly because the McClellan oscillator has now dropped below zero, but on volume, we went a little bit sideways on Friday. Our oscillators, for the most part, the shorter term ones, they show improvement. The longer term ones are starting to turn a little bit, but are still negative. And then at the very bottom, we're seeing in our really short term oscillators, we're seeing more sideways action. As far as our trading systems, we're seeing a mix here as well. The Elder system actually went back to a blue bar on Friday after turning red. But the SAR, which is a little bit longer term than the elder system, it's still showing the dots below the bars. So that's positive. Our different charts, the Heiken Ashi chart, yeah, it's showing a bit of a decline here. And with solid bars, solid candlesticks, I should say. The Kegi really hasn't changed all that much. It's turned back to black and we're going sideways. The Renko chart, there was no change from Thursday to Friday, where it did draw in a new box. Three-line break continues to show some improvement. Equi-volume, since we had an up day, there is a green candle, so that is positive overall. Point and figure, no change. It's still suggesting that we're in a double top breakout potential, but we want to see this too go all the way back up to the 1 and then break out above that if you're bullish. Or if we start to really go down, more zeros will be drawn as we go down further, but overall the uptrend still is intact. Our long-term charts, we're not really getting much from some of the long-term charts that I look at. And I'm trying to revamp. I usually do a weekly video, and I'm totally redesigning how I used to do that before. And I don't know if it'll be ready this week or not. So for those of you that are interested, I'll post that when it does become available. I might need another week or two to work on that. Broad market, you see the S&P. And here's the mid caps, which are in danger of now going back down into this sideways movement. And the small caps, that's where they're at, is in this sideways movement. Then Amazon was kind of the big story stock on Friday. It was up 13.5% on good earnings after just kind of getting pummeled on Thursday, because they felt, well, if Facebook's going down, Amazon must be going down too. Well, that ended up not happening. Then Snapchat also had a pretty strong day. It was up almost 59%. It got hit pretty heavy on Thursday, only to rebound quite a bit on Friday. And if you own any of these, man, you might need some extra Pepto-Bismol or Melanta or something. The FANG stocks had an okay day. They were up a little over 2%, but we closed right in about the middle. ARK, it was up over 5% after having a strong down day on Thursday. So we're just kind of bouncing like a basketball right now. The Dow, we're still slightly above the 200 period moving average, and we're right at about the pivot level. So we want to keep an eye on this, but it's looking okay. It's holding up right now. Small caps, no, they continue to go sideways, and we're seeing the death cross with that. Mid caps, kind of the same thing. We're dropping back down into the sideways trend that we've seen the last week to week and a half, and we're in danger of crossing below with the moving average. The NASDAQ, yeah, the 50 is falling down. We're kind of chopping more sideways. You could see this as positive or negative. Are we building a base before we get ready to shoot higher? Or are we just taking a rest before we get ready to shoot lower? I'm leaning personally right now more towards the upward bounce, but that could change. Something could happen. We could see things in the charts to change that scenario. The NASDAQ 100, after looking like it was going to break above the pivot, spent the last 2 days chopping sideways. Then the Vixen, just love that name. It closed kind of near the lows of the session. So we saw some decrease in fear on Friday as far as the NASDAQ 100 is concerned. The NYSE, we're still staying above the pivot and we're still above the 200 period moving average, but we see a declining 50 period moving average that is acting as resistance. The Wilshire, and they call it the Wilshire 5,000, but I think there's like 2,000 stocks in it now or something. We came right up to the pivot, which acted as resistance, and we closed kind of near the high, but we're still kind of treading sideways overall. As far as the broad market, the dollar, which just got hammered, which that was because the ECB, the European Central Banks, and the Bank of England, they raised interest rates, which increased the value of the euro. And the euro and the dollar are the two main currencies. So if the euro goes up, the dollar tends to go down, and vice versa. We saw a bit of a bounce on Friday on the daily chart. And then for the week, we did close below the moving average. We still have an upward trend that's in place for the dollar, but there was some damage that was done during the week. Oil, man, we're just shooting to the moon on this. We're up over 92 now. Gold, we're not really going anywhere. We continue to flounder sideways. Silver is up a little bit, but after hitting that resistance a number of days ago, it really got knocked back down. CRB was up 0.5% on Friday. This is what you see feeding into a lot of the inflation fears. And then I haven't shown this chart in a few days where we see oil has really been performing well. The S&P, this just goes back a year, and it's kind of bouncing around a little bit. The dollar saw some declines this past week. Gold is going sideways, and bonds are really seeing weakness as interest rates go up. Let's look at bonds. We did see a real increase in interest rates on Friday in the 30, 10, 5, 2, even the 3-month. All pretty much across the board, we're seeing an increase in interest rates, which, yeah, okay. But when you compare this to inflation, and remember the official inflation number is 7%. But if you go back to how we calculated it in 1990, the inflation rate would be around 11%. If you went back to how we calculated in 1980, we would be at 14 or 15%. So even with, if you're going to tie up your money for 30 years, and let's say you just take the 7%, you're still seeing over about a 5% loss in buying power if you get into a bond. So they're just not very attractive now. But if things really start to turn and go down, you will continue to see this play where people are getting out of the stock market. They're putting the money into bonds, which is considered more risk off, because they're just afraid of what could happen in the stock market. That seemed to be the scenario on Thursday. Well, it's not the scenario that was played out on Friday. So what is our outlook for Monday? The technical signs are mixed with a positive backdrop. We still have the 50 above the 200. That's the main trend indicator that I use. The long-term trend is up, but we are seeing some signs of weakness. But I've been saying that now for a while. We're still in the middle of earnings season. The battle continues between growth and value, which is almost changing on a daily basis. On Monday, we do have consumer credit that's coming out. And then the geopolitical events. I didn't add the Olympics to this, but it's still there. So what can we conclude? I'm mixed across the board. It's really hard to be definite about this. Remember, I use the consensus approach. I don't use just one or two indicators. I look at everything I can find and then reach a general consensus about the market and then a specific consensus about my evaluation of where things will go. So I'm mixed right now. It would be nice if the ADX was not trending. This would be a good time to do some sideways strategies. But since we're still in a trend and that trend is negative, that makes it a little more nerve-wracking to enter those kinds of positions. And it's really hard to get into a trend-based system right now because we're really treading water sideways. So the S&P is mixed. The short term and intermediate term continue to be mixed. And the long term is remaining positive, but showing some weakness overall. So thank you very much. I hope you have a wonderful weekend and getting ready for the Super Bowl next weekend. Enjoy the Olympics if you watch it. I know there's a lot of controversy about should we even watch it or not and what's all happening this time. But anyway, If you do watch it, I hope you have fun. Have a good week, and I'll talk to you after Monday's action.